Welcome to the fourth episode of Investing Alchemist's complete learning series on stock market investing and trading. We are here to learn and grow together. In this video, we are diving deep into the fundamentals of the stock market. Now, when we talk about the stock market, it's not just about investors, it's about the entire ecosystem. So, let's paint a complete picture. From a company's inception and its decision to raise funds from the public to getting listed on the stock market and individuals investing and trading shares. What exactly is the stock market? According to the dictionary, it's a place where shares of publicly listed companies are traded. Picture a bustling marketplace, but instead of goods, people are buying and selling shares, which represent ownership in those companies. To grasp this concept better, let's immerse ourselves in a story. Imagine a tech startup called Tech Innovations, founded by a visionary entrepreneur named Ramesh Patel. Ramesh has developed groundbreaking technology and wants to take his company to the next level. He needs capital to fund research, development, and expansion into new markets. Now, there are a couple of critical aspects to understand about any business, ownership and valuation. Ramesh owns 100% of Tech Innovations. He is the sole owner, and he is responsible for all its operations. Valuation refers to the worth of the business in financial terms. Tech Innovations has been incredibly successful, generating substantial revenue and profits. Let's put some numbers to it. The company is making a monthly profit of Rs. 5 lakhs and its total valuation is approximately Rs 1 crore. As Ramesh's ambitions grow, he realizes that he needs a partner, not just any partner but someone who can invest significant capital and actively contribute to the company's growth. Ramesh needs a co-owner, someone who shares his vision. The question is, how can Ramesh bring in this new partner and share ownership? The answer lies in the world of stocks. Stocks, also known as shares, represent units of ownership in a company. Tech Innovations decides to issue shares. Think of these shares as certificates of ownership in the company. In this case, Ramesh decides to divide the ownership into 1,000 shares, making each share worth Rs 10,000 based on the company's total valuation of Rs 1 crore. Ramesh finds his ideal partner, Suresh Verma, who believes in the company's potential and is willing to invest Rs 50 lakhs. In exchange, Ramesh offers Suresh 500 shares, making him a 50% owner of Tech Innovations. This process illustrates how stocks are the building blocks of ownership in a company. With Suresh on board, Tech Innovations flourishes. Their technology gains widespread acclaim, and they decide it's time for further expansion. But how will they get the money for such a big and challenging project? Ramesh doesn't want to take on loans and the burden of debt. He wants a more flexible and potentially rewarding solution. That's when he hears about the stock market. Ramesh learns that by taking Tech Innovations public, he can raise capital by offering shares of his company to the public. This process is known as an initial public offering or IPO. An IPO allows the public, including individuals and institutional investors, to invest in Tech Innovations by purchasing shares. In return, they become shareholders, sharing in the ownership of the company. It's a win-win. Ramesh gets the capital he needs for expansion, and investors have the opportunity to participate in the company's growth. In Tech Innovations' IPO, Ramesh decides to offer 15% of the company's shares to the public. That's 150 shares out of the total 1,000. Initially priced at rupees 10,000 per share, the share price increases to rupees 20,000 over time. Investors who purchased shares during the IPO and held on to them saw their investment grow in value. For instance, those who bought shares at rupees 10,000 each could sell them later at rupees 20,000, doubling their investment. Now, why do investors exist and what's their objective? Investors participate in the stock market to grow their wealth. They buy shares in companies, hoping that as these companies prosper, the value of their shares will increase. When the share price rises, they can sell their shares at a higher price, making a profit. So, in summary, the stock market is a place where companies raise capital by selling ownership shares to the public, and investors participate to grow their wealth. It's a dynamic ecosystem with opportunities for everyone involved. In upcoming episodes, we'll explore more about the stock market and delve into its intricacies. Stay tuned and keep learning. If you found this video valuable, give it a thumbs up. And don't forget to subscribe for more finance and investing insights. Thanks for joining us on this journey to financial freedom.